A new year and an update to my Trading212 portfolio. So 2022 was one of the worst years in the stock market. So how has the beginning of 2023 fared? Let's get straight into the portfolio and find out. So as you can see, the value of my portfolio is £1,211. Now compared to last month, this is significantly higher. So last time I did my update, I was around £440, and since then I have deposited quite a bit. And there are a few reasons why I have deposited more into Trading212. So the more I use a brokerage, the more I like it, the more I am trusting with my money and the more I actually put in. And this was initially reflected by around £300. And then what happened was my main portfolio free trade reached around £70,000 in value. And I thought it was time to stop depositing in there just for the FSCS protection, which gives you around £85,000 in cash. So from now on, Trading212 is going to be my main portfolio to which I deposit my monthly amounts, which will be between around £1,000 to £3,000 a month. That being said, let's look at the past month performance. So January has relatively been a much better year in the stock market, with some rallies that we've seen in the overall total stock market. And as a result, my overall portfolio is up by 2%, which is a £25 gain. Now the total value of my account is £1,219. This leaves around £7 in pending orders and around 92p in cash. So apart from the deposits I put in, the stock market has just gone up a tiny amount, so nothing too crazy going on in January. And also we're not suffering from massive losses in our portfolios just yet. So actually yesterday the UK GDP numbers came out and they were actually higher than expected. The economy in November grew by 0.1%, which means that technically we can't have been in a recession at the end of 2022, because technically a recession is 2 quarters of consecutive decline in the GDP. So I have 35.1 shares in Vodafone, and that is up by 0.34%, so not a huge gain, but also Vodafone was going through quite a dip when I bought it, and over the past month Vodafone has gained around 6%, which is a good return on the month of January. I have 0.05 shares in the FTSE Japan, and just for fun I have been kind of trying to trade the FTSE Japan just because I think it's fun and not a whole lot of money inside there. So if you go into the history, you can see that I sold around 21 shares with a profit of £4.30, and that would have contributed to the overall gain in my portfolio. So sometimes it is fun for me to kind of like trade some ETFs, and I think that trading ETFs is not too unsafe, and it's only around £500, so it's not too bad. So I wouldn't highly recommend people to be trading, but it's nice to just put my money into something and have a few pounds of gain. It's just, for me, it's fun. I have only £1 worth in the FTSE All-World High Dividend Yield, and that is up by 3%. Unilever, another £1 worth, so that's 0.02 shares, and that's up by 8%. So Tesla has been having a crazy month in the stock market with a huge decline over the past month and then some sort of incremental increase following that. So I bought around £5 worth in Tesla. It's actually not doing too bad, it's down by just 1%, so that's a 5p loss. Tesco is a company that I put in around £500 just to do a bit of fun trading. And as you can see, I have 203 shares in Tesco, and that is up by £2.45. When it makes a certain amount of profit, I might just sell that and then reinvest it into another company that I think is going to do well in the short term. This way I get to spend around £500 having a bit of fun over the stock market and seeing if I can make a few pounds here and there. It's just a bit of fun, nothing to be taken seriously. But the reason why I did invest in Tesco is because their numbers came back and the revenue has been really good. So if we go into their financials down on Trading212, we can see their income statements, and year on year the revenue is increasing. But if we go into the balance sheet, we can see where this money is going into. As you can see, Tesco is taking in a lot of money, over £50 billion. Of course, their operating profits are going up as well. The cost of living crisis, the food prices increasing, gas, all that. So if we look into their balance sheet, we can see the total assets to liability ratio, and still the total assets they have is more than their liabilities. We can also see their cash flow. So of course, their operating costs have increased, their investing costs have decreased, and so on and so forth if you really want to get into the financials of a company. Starbucks, I have 0.2 shares, and that's up by 6%. Starbucks is doing pretty well in a recession, and as I said before, Starbucks is typically one of those companies that does well in a recession because people are still going to buy coffee regardless. Rolls-Royce, I have 13 shares, and that is up by around 47%. So Rolls-Royce has been doing really well over the past month. As you can see, a good increase in their stock price. Over the past year, you can see that it has kind of recovered from the lows that were seen back in September. I still think Rolls-Royce has a lot more to go, so it can be a good company to invest in. Pinterest is up by 6%, which is actually really good for a tech company. Nvidia, I haven't actually realized they're doing quite well over the past month. They are recovering back from the end of December, where the stock market actually closed quite low towards the end of the year. And as you can see, in the beginning of January, tech companies are typically actually doing better, and that is largely due to the fact that investors are thinking that the rate hikes in the interest is going to be slower and slower. Therefore, as the stock market is forward looking, lower interest rates mean that eventually the interest rates will start to decrease, and of course the stock market will go up as the borrowing of money becomes cheaper. National Grid, I have 0.5 shares and that is up by 2.8%. I have 16 shares in my favorite iShares Core S&P 500, so the ticker symbol GSPX. This has been doing really well over the past month. Like I said, many technology companies are doing a lot better in January compared to December, so this has kind of increased the value of the S&P index overall. As you can see, I have a return of 3.45% and that is a gain of £3.63. Overall, I do think that the S&P 500 is probably my chosen place to put my money, and I think that most of my contributions going forward are just going to be solely into the S&P 500 with some other money just sprinkled across. But I am building up my shares in the GSPX, so if you've watched my free trade video, I have over 8,000 shares in the GSPX, which I all bought last week, and I am hoping that it continues to rally up, but if it doesn't, I'm going to be buying them for a bargain. So Royal Mail, which is called International Distribution now, is up by 7.5% and I have 6 shares in that. It's actually really nice to see all this green portfolio. I'm not really used to seeing so much green in my portfolio because I started investing in April 2021 and then soon after everything went downhill. GSK 0.3 shares and that is up by 8%, which is pretty good. Fiverr International is down by 7.5%. Not too worried about that. EasyJet, I have 0.2 shares and that is up by a big 23%. So if you can see over the past month, EasyJet has kind of taken off, no pun intended. It seems like things are going good for them, and slowly but surely the aviation industry is going to go back to pre-pandemic levels. And similarly, we've seen Rolls-Royce increase also in its share price. Rolls-Royce is a maker of engines for most of the planes such as Boeing, and so when the aviation industry does good, Rolls-Royce does good too. Direct Line Insurance is doing really bad. It's tanked over the past month and it's down by 17%, but luckily I don't have a lot of shares in here. I only have around £4, which is not too bad. Lufthansa, another aviation industry flight kind of field, that is up by 8.5%. Looks like flights are doing well, and that's a return of £1. Deca DAX Plus maximum dividend, that is up by 12%, which is really good. So if you like dividend investing, this could be a viable option, a viable ETF to put some money in and see it grow and receive dividends from it. Carnival is up by 8% and that's a 56p gain. So Avaya actually have an order for them. So Avaya's been going up and down over the past month. There's been talks of bankruptcy on Avaya, and in my free trade portfolio I bought £900 worth of this last year and it's down by 99%. So I thought I'd buy more. So I actually have been buying and selling Avaya stocks. Of course, not that much money that I'm making, so 93p here, 26p here, but I think Avaya could be a stock to have a bit of fun in because it's technically a penny stock now, and there could be some money made. Every now and then it goes up by 50%, so the gamble's yours really. And I'm waiting to buy some more stocks at 19 cents and then probably sell it at 30. Aston Martin, I have 1.3 shares and that is up by 19%. Apple is doing a bit better than it was last month. So as you can see, most tech companies are seeing their increase. I have 0.16 shares in Apple and that's up by 4%. Amazon is doing really well actually over the past month, and it was doing seriously bad over the past 3 months, but it seems to have been recovering just like the S&P 500. I have 0.48 shares, so around half a share, and that is up by a big 14%. Alibaba 0.01 shares, and that's up by a big 21%. So we can see tech companies are just doing quite well over the past month. Airbnb, I have 0.001 shares, and that's up by 7%. So it's not too bad. It's not doing bad at all. AMD over the past month, just like Apple and Amazon, is doing pretty well, and that is down still by 6.5%, so not too bad over there. Next, I want to show you all the free shares that I do receive from Trading212 because it's all you lovely people actually signing up with the link. And for full transparency, it's just good to know how much I get from free shares. So actually I received 5 shares in total, so thank you very, very much. One person missed out on a free share here. So what happens is after 5 free shares, I no longer get any free shares, and you will get a free share if you sign up with my link, but I won't receive it, which is fine. I'd rather you get the free share anyway. There's 2 people that have been signing up and haven't finished their sign up process. By the time this video is out, these would have expired anyway, so I guess 2 people would have lost out on free shares, which is still not a problem because if you sign up again with either my link or someone else's link, you should still get the free shares. For me, it's never about getting free shares. I like a platform, I put more money in it, and I make videos about it, and you can make whatever opinion you want about that platform. So I also want to show you my almost daily dividend pie. So this is a copy of the almost daily dividend pie, and last month it wasn't doing too well, but this month is doing a lot better. So as you can see, the value of my portfolio now is £404.20, and I have deposited around £400 and some odd pence, like maybe 60 pence, something like that. So around £400, which is the recommended minimum amount you have in your almost daily dividend pie. This can be found on Trading212, or if you use the link in the description down below, you can actually find this pie too. So we'll just quickly go through some of the bigger holdings and see the movement of the holdings. I'm not going through everything because there's 50 companies here. As you can see, Apple's not doing too well with a 12% loss. Realty Income is almost level. We have AT&T with a 4% gain, Procter & Gamble with a 4% gain, LTC Properties down by around 10%, McDonald's surprisingly down by 3%, JP Morgan Chase 9%, Caterpillar 16%, which is really good. Laos is quite steady. Illinois Tool Workshop, which is doing pretty well. Starbucks up by 10%. Stag International 6%. Medtronic 7% loss. Archer Daniel Midland 9% loss. Franklin Resources 14% gain. And if you want to see the full list, you can do that yourself. So in terms of dividends, I've received £1.62, which is actually pretty impressive from a portfolio size of only £400. If you had been following these updates, you would have known that I initially probably invested around £200, and then I put 50, 50, 50. I didn't even bulk put in £400 in the beginning. You can actually still get dividends from putting around £200, although not all the companies may pay you dividends, as there is a minimum of 1 cent dividend amount. So take that for what it is. So overall, I'm very happy with the almost daily dividend pie. I don't think I'm going to actually be contributing more to the almost daily dividend pie, just because I prefer putting my money into growth stocks, which motivates me more to invest. I know a lot of people will find dividend investing more motivating. I hope you all had a great start to the year. Thank you for those who have signed up using my link. Make sure to check out some of my other videos, and I will see you in the next video.